Let's welcome in a very special guest at this point of time. Mehrab Irani is now joining us. Mehrab, thank you so much for taking out time for us. Just wanted to get a sense about mid-cap versus large cap. Are you surprised by the mid-cap correction?
Good morning, Pankaj. I don't think I'm surprised by the correction. Today, if you see valuation on a 12-month trailing basis, the large cap Nifty is valued at almost 23 times forward trailing earnings, and the forward is almost around 19 times, which analysts are expecting some 16 to 18% earnings growth. However, if you see the mid-cap index, that is valued at almost 40 times trailing earnings, and the small cap is still valued at almost 80 to 90 times trailing earnings. So I think there is a lot of expectation from a lot of these mid-cap stocks, which have already rallied 50 to 100% and even more over the last few quarters. Now, if you see the fourth quarter earnings, most of the companies have declared earnings, and what we have seen is that the top line growth has been close to 11.5%, which is at I think an 11-quarter high. But if you see the EBITDA growth has only been 1.6% with a 300 basis point fall in the EBITDA margin. I think that can be attributed to the demonetization effect. I think a lot of companies are saying that the wholesale channel has been affected. If we see in certain consumer companies, staples, auto, particularly two-wheelers, also media company, I think they have reported degrowth in volumes, degrowth in sales, and that is because of demonetization, I think. So that contraction has happened in the EBITDA margin. On the bottom line, I think there is a growth of almost 6.3% till now, which is, I think, as per analyst expectation, it is slightly lower, but analysts are still expecting almost 16 to 18% growth for the current year. So if that materializes, I think we can still somehow justify the high valuations. However, if that doesn't come in, I think we have to be slightly cautious at this point of time.
Right, but right now with the correction, the way it is correcting, you think that there are some sellers in the market who realize that a lot of stocks are trading at very high valuations?
Yes, I think people are realizing that, and particularly I think the market is very closely watching at this fourth quarter results. So wherever there is disappointment in whichever sectors, I think we are witnessing heavy sell-off. Maybe even large caps are falling 5% plus in a single day, wherever we see disappointment in the results.
Right. Say, if the mid-cap, see, if you look at the Nifty, it's just down 0.8% in the last 4 days, and the index or the mid-cap index is down 6-7%. What sort of a correction in the mid-cap index would start to make it look attractive? I know you look at stocks and you look at it on a stock and sector by basis, but at what level, like we say for Nifty around 8,800, it will be attractive. At what percentage correction would you start to say that mid-caps are now fine?
See, if you see the mid-cap on a trailing basis, as I said, is trading at almost 40 times forward trailing earnings. So on a forward basis, yes, whatever is your expectation, you can put in the numbers. But I think at least a 10% plus correction on the mid-cap index would certainly make it look slightly attractive from this point of time.
Right. Say if somebody wants to invest now, do you think large caps are a better bet, or investing into a basket of large cap stocks is better versus the mid caps right now?
I think at this point of time, large caps offer comparatively better value compared to mid caps, and also safety, because when you are investing at close to all-time high levels on the indices, I think it's better to look at risk also, not only return expectations. So I think in that sense, large caps will offer better value, but obviously there are pockets of good stocks in the mid cap universe also, so we have to be very stock selective.
Right. So one of course is consumer. Where you talked about the sales growth which has happened and the margin decline which also is witnessed. How do you see markets reading into these names? So Godrej, you had margin surprise, sales was lower, it went up. For some other names, you have sales going up but margins going down, markets have reacted negatively. You think right now market is adjusting between GST and post-demonetization era for these companies?
Yes, I think so. Even in GST, I think, in FMCG basket also some sectors are going to be positively affected, like cigarettes, etc. are going to be positively. Some, I think, staples and all are going to be negatively affected. So market is very closely watching at this. Also the volumes, as you said, in certain sub-segments, the volume growth was good in the FMCG space, while in certain it was not so good. So and if you see gross margins for a lot of the FMCG players up to at least last quarter was almost at a 5-year high. But now I think the gross margins have also slightly been tapering off from the all-time highs. So I think the market is watching individually different sectors, different stocks within the FMCG space as well.
Right. So, in terms of GST, what is the impact that you see on an overall basis? Now that we have more clarity as to when it will come, how it will come, do you think it will be disruptive in nature or broadly in line?
I think it would be less disruptive than what market was imagining earlier. I think the effect on inflation also, particularly CPI, will not be as bad or as disruptive as initially analysts were expecting. Also, if you see on the positive side, I think some sectors will be positively affected. And yes, negatively also, I think financial services, particularly where service tax has gone up from 15 to 18%. So that will slightly affect, like say insurance and others, which are currently doing very good. So there will be slight effect of GST on those sectors.
Right, but over a long period of time, you think investors will give implementation a time or numbers to come once GST is implemented?
I think investors should obviously give some time because it cannot happen so soon. But I think the government is moving and on the right direction within the right time frame. I think some time should obviously be given.
Right. Year after year, Mehrab, every year I think we would have asked you this question that when are you expecting a cleanup in the PSU banks, or when are you expecting PSU banks to do well? What is your sense on the recent news flow regarding NPA? So in the last 2 months, government has been aggressive with new laws, with new ordinances that they have come out. Do you expect some meaningful solution to come in the near term?
Yes, I think RBI and the government have been very proactive in solving this NPA mess. And, as you said, year after year, we have been every year making estimates and adjustments and thinking that, the NPA problem will be solved. But every quarter when the results of a lot of PSU banks come, it keeps on disappointing us. Today, if you see the gross NPA of the whole sector is more than 12%. Individually, many PSU banks, the large and the small ones, have 15 to 20% gross NPAs if we add the other restructured other loans. And still, we don't know where the light is, whether there at the end of the tunnel. So, I think the government, RBI, is obviously moving on the right direction, but certain tough measures, tough steps have to be taken once to solve this NPA mess, because unless this doesn't happen, the credit growth is not happening. PSU banks are not in a position, which is 70% of the market by size, is not in a position to lend because they don't have capital, they don't have money to lend. So if this problem is happening, credit growth is today at a multi-year low. So unless the credit growth happens, I don't think the economy can really grow. So this is a serious problem, and I think once this problem is solved, I think this will be one of the biggest triggers for the market, for the banking space, for the infrastructure space, and for the whole economy as a whole.
Right. Just talking about the NPA resolution, it's easier said than done. So whatever comes, it will take some time. It will not be easy. Still, the pain will have to be borne by, some banking names.
Yes, I think so. Pain would obviously have to be borne, but I think sooner we bite the bullet and bear the pain, I think it is better than just elongating it, because the effect on which it has on the economy is much, much wider, and the multiplier effect it has on the growth is much wider through the credit effect.
Right. Can you just talk about private banks then? Do you think private banks would continue to do well till the time PSUs are solving their NPA problem versus focusing in on growth?
Yeah, private bank, retail banks are still doing good, which are focused more towards the retail orientation. I think still there is a lot of growth in that sector. Housing sector, we are witnessing there is a lot of growth. Even the government is putting a lot of impetus on the low housing thing. Also, if you see on the other retail segments, whether it is personal loans, credit cards, whether it's auto loans, unsecured loans, everything, the growth is very good. The only little one point I want to say is that a lot of the large banks also today, if you see almost 30 to 40% growth is coming on a quarter-on-quarter, year-on-year basis in a lot of the sub-segments within the retail, which are, a lot of unsecured loans. So I am sure those banks know how to manage it, but if it grows too fast, too soon, then maybe after a few quarters, there can be some amount of NPA issue in those accounts as well.
Right, but overall private banks which don't have legacy issues are still looking good for growth?
Yes, certainly. Private banks which don't have a legacy issue are certainly looking for growth, although valuations we have to be slightly cautious in many of them. But yes, the growth is certainly there to stay.
Right. And in terms of, private banks where now you are starting to see some insurance value to come in, you think that is making the banks look cheaper because on a consolidated basis, markets is still looking at NPAs rather than the subsidiary valuations?
Yes, I think a lot of private banks and even some PSU banks have built very good subsidiaries, whether in the life insurance space, non-life space, mutual funds, other financial services. And now a lot of value is being given to those industries. And I think, the insurance sector, which you mentioned, I think is in for growth in India for next 5 to 10 years. And it's a much cleaner business than the banking business. There is no NPA problem within the sector. The growth has been there. And within that also a lot of the sub-segments, if we see the AP also, average premium equivalent, it is growing at much faster rate. Even the ULIPs, which we thought that would not do good, but companies have been able to manage very well. They have positioned the product very well, and over last 5 years, though that product also is going good, the endowment and other products is doing good. So I think overall this insurance sector is a very attractive pocket within the financial services, and I would certainly be overweight on that.
Right. In terms of insurance as a business, do you like that business? So we have one listing, probably HDFC and Max would merge quite soon and become a bigger entity. Do you think that insurance as a business can do well? SBI Life is talking about coming up with the IPO soon. Do you think insurance as a sector is something which can do well?
Yes, Pankaj, I certainly feel insurance as a sector will do very good, and we can see the growth for next 5 to 10 years on a long-term sustainable basis, and with a much cleaner balance sheet, which I was saying just now. So I think insurance will do good. If you see, ICICI Prudential, it has more on the ULIP side, which it has managed very good for itself, while the other players which have maybe 25 to 30% from the ULIP, while others from the investment-related products, which they have also managed very well. So I think within the sub-segments, everything offers very good value, and I think the growth is here to stay. So I think insurance is although a valuation we have to see, but still it is a very safe and good sector to invest for long term at this point of time.
Right, and in terms of insurance, because it's a new sector, do you think people are not valuing it correctly, or over a period of time people will realize that over a period of 10-15 years this is a great business to own?
Yeah, I think that always happens. When private banks were formed 10, 15, 20 years back, people are not understanding that. Then over a period of time, they created value. Even a lot of the small private sector banks, the regional players, they also created a lot of value over a period of time. And then people realized it. I think insurance is a very new sector. It is slightly complicated to value it. A lot of information is still not very clearly available, and people are still on the learning curve. So I think, yes, it will take some time, but according to me, it's a very good sector and a very safe sector where the growth can be very, very safely assumed. And I think over longer term, good players, once you select the good companies at decent valuations, I think over longer term, investors would make decent money, decent return on their capital.
Right. What do you make of the pharma sector? In the last 5-7 days, there is, of course, it was a big underperforming sector, but in the last 5-7 days, the correction has just increased. Is it starting to get in the value zone now?
We can always argue that, it is starting to get in the value. When a large sector like pharma, which has always created wealth and a safe sector, which is assumed to be a safe sector by investors over a longer period, whenever that sector or good stocks in that sector falls, investors will obviously look at value, because today, if you see, most of the companies are trading at all-time or 52-week highs, while pharma companies are trading at, at a multi-month low. So at that point, it is obvious to try to find value in those stocks. However, the problems which certain companies are facing are quite serious, and unless those problems get solved, I think it's better to be slightly safe, because we don't want to fall in the value trap. And same can be said, I think, about the software sector also. Today, if you see, a lot of large cap software sectors are trading at much below valuations than the Nifty also, and at their own, I think, 5-year low price to earning multiple of their own averages also. So it is quite a good value, we can say. But however, if the growth doesn't come, and if there are some serious structural problems within the sector, then we can obviously fall in a value trap. So we have to be very careful about pharma and IT at this point of time.
Right. So despite valuations or underperformance over there, just stay away from these sectors?
It is better to be underweight. Yes, obviously there will be a couple of good companies. Like in IT also, I think in mid-cap IT, we can still find some good companies, particularly on the product side. So we have to find good companies, but just to buy, the companies which have been favorite for last 10 years and just say that it's a value buy would be a little difficult thing.
Right. In terms of consumption, of course, GST will have an impact, plus these results are having an impact. What will be your call on the consumption space? We can just divide it into FMCG and consumer durable. What do you like more? Do you like anything in the consumption space?
Consumption, although valuations are very costly, but I still find them quite attractive. I think the growth is there to stay, and certain numbers which we are witnessing, some amount of volume growth which is happening in certain large consumer space. I think I would tend to be on the positive side towards the consumption side, the FMCG side, and even the consumer durable side. I think there is a lot of growth potential still there, and within the many of the sub-segments as well.
Can you talk about some of the sub-segments where you see strong growth in the consumption space?
Yeah, consumption, as I said, I would be quite positive in a lot of the consumption space, whether it is, the staples, whether it is the consumer durables also. The valuations are no doubt not cheap. They are valued at 30, 40 and northwards of 40 times earnings also. But the ROE is still remaining very attractive at 50, 60% plus. And if the volume growth happens, if you see last few quarters of volume growth was not there. But however, in this quarter, in certain larger companies also have reported 4 to 5% volume growth. So if volume growth happens, I think we can argue for those high valuations to sustain.
Right. Within the consumer space, how would you view hotels, airlines, which are completely discretionary? While airlines may be impacted by high fuel costs, There's a lot of talk of how the hotels will manage different tax rates under GST. How would you view these two sectors?
Yeah, airlines I think is doing quite good. If you see the passenger traffic is continuously growing at 25-30% when every month data is coming. So they are doing quite good. Certain large companies have consolidated the market after the exit of certain other players, and now they have a very good market share. I think Indigo has almost more than 40% market share. SpiceJet is managing the load factor very well. I think every quarter on quarter they are reporting 90% plus load factor. So airline sector has been doing quite good, and I think they will continue to do good, at least in the near foreseeable future. I think they would continue to do good, and I think if an investor is having, he should continue to hold the airlines sector. As far as hotels are concerned, I think still we have to be slightly careful. No doubt, I think the worst is over for the sector, but I think still we have to be slightly careful on the growth and which stocks and which companies we invest over.
All right. How about the agro-based consumer goods? Do you think those stocks have also rallied, be it seed companies, be it tractor companies, or do you think there is still scope for further up move? Can one look at buying some of these names now?
Yeah, if you see the agro sector or tractors which you mentioned, 2 years back, the monsoon was bad, and last year the demonetization ate into the sales of that. So if you see the tractors, etc., I think recently when we are talking with certain companies, they are talking about revival, and particularly when there is a projection of good monsoon this year. So if that happens, I think, it will be positive for certain agro-based companies and certain, as you said, tractor and other companies. But yes, I think we are close to the bottom in a lot of those sectors, and we can look at value buy within them.
Right. Now, you said that the government and the RBI are making a lot of efforts for NPA resolution. We have seen the government come in with some support for the steel industry, because that was one where there was the large pile of bad loans. And the steel industry seems to be doing better. Prices have risen, cash flows are positive. Which other sectors do you think we can see some moves from the government, and we could see an up move in price because of government support?
It's very difficult to predict what the government will do, but as you mentioned the steel sector, I think that sector is, yes, it has one of the highest NPAs within the banking system, and whatever the government is doing on the right move. And internationally also, if you see steel prices and iron ore prices have slightly firmed up. So, and the way, and also a lot of domestic companies have also performed, the stock prices have also actually more than doubled from the bottom also. So I am little cautious, but I continue to be slightly positive on the metal space at this point of time, because I think some kind of revival is happening globally also and in India also.
You're talking about global growth. Do you think that will support metal prices? And China, the demand isn't looking very strong. The data is a little mixed, and metal prices are driven by what happens in China. There's a lot of talk of growth picking up in the US, but we're still waiting for the big infrastructure push to come through. That hasn't happened. Would you wait? Because metal stocks have moved up a lot over the last 1 year.
Yeah, at this point of time, I would wait. I would not put additional money in that. But this China factor was well known by the market even a couple of years back also. So things have just, at least on the margin, improved from what it was bad. And even in the US, I think some amount of infrastructure spend is going to happen. So from this, I would obviously not buy more, but I would wait and watch, and with a slightly positive view.
All right. For the entire talk about how the rate cycle has proved to be very beneficial for equities, do you see that turning, or do you see interest rates remaining lower? Because if inflation globally is picking up and their lending rates also are going up, wouldn't that pressure the RBI to decrease that differential in rates? Where do you see the interest cycle from here on?
From here on, I don't think interest rates are moving substantially lower. I think, yes, maybe 25 basis point more. If you see today, the 10-year GSEC is trading around the new paper around 6.75%. So maybe around 25 basis point lower from here. So that is what I see. But yes, I think the inflation is obviously low, and I think RBI will support growth. And interest rates, I think, staying at the current levels, the earnings yield become quite attractive. So I think in that sense, the valuations become attractive if you compare with interest rates. So The only problem is that the credit growth is not happening, and that is not a function of interest rate. Interest rates are low, but credit growth is not happening because the opportunities are not there in the economy, because the PSU banks are starved of capital. So unless that problem is solved and the credit growth is revived, the low interest rate is not really actually benefiting everybody as it should be.
Right, Mehrab, just a word on the flows. You talk to a lot of investors, you talk to a lot of players who put in fund into emerging markets. Can you just tell us that when things go down, again that scare comes even to the FII space? So it's exactly the same?
Yes, the scare obviously comes, but as we are now seeing, the domestic flows have been very good. Today, we are seeing mutual funds getting 4,500 plus crores of SIP in equity funds, which is, I think, never happened in India. And now the fund managers are talking that within 2 or 3 years, they would reach $1 billion of equity inflows per month. Plus, there are balance fund inflows. Even if you see the insurance sector, LIC and the other private insurance players, they have also become a formidable force. So I think now whenever at least we have a kind of counterbalance. For last many years, maybe 10 years or more, we were always talking about, when the local investors will also be a counter force to the FIs. But I think now that thing is happening in a reality. Notwithstanding that, obviously, if there is a flush of FII selling, then even the local funds will be little slowing buying. But at least we know that now both the forces are slightly balanced. Right.
And do you expect earlier what used to happen is every time markets used to go down, inflows used to stop from DIIs. You think that has changed now?
I think if you see in this whole cycle over the last few quarters, that has actually changed. And this time, when the markets were also falling, actually we had seen mutual fund distributors, sales managers and fund managers being very aggressive. They are going and educating people. And I think the investors, even the retail investors have now realized, I think the new generation is now realizing the value of, investing early, investing in SIPs and investing over, a longer 10, 15-year horizon for their returns to come. So I think at least we witnessed that in this cycle. So it did not happen that retail investors sold at the bottom and bought at the top. So that is not happening, and I hope that thing changes, and that would be the best thing to happen for Indian equities and Indian markets.
Right. Can you just talk to us about the infrastructure sector as a whole? So I think we've covered most of the sectors, but infrastructure, do you expect a pickup over there, or it's very, very selective in terms of sector within infrastructures that you would look at?
I think it's still very, very selective, although I would love that the infrastructure sector should pick up, which we have been talking for a long time. However, that is still not happening, and that is the only drag which is happening in the economy. I think once that picks up, it will be the biggest boost to the GDP also. Within the sector, yes, some sectors, as we know, like roads, railways, they are doing quite good. They are showing some amount of promise, and where we are very positive. Otherwise, but infrastructure as a whole, still it is very difficult. If you say that we select 3 or 5 good stocks within the infrastructure space, it is with conviction, it is still very difficult to even select at this point of time. So I think although I am hoping and positive on that sector, but it is very, very stock selective at this point of time.
Right. Just in terms of infrastructure, how do you think essentially one should look at? So look at infrastructure suppliers or look at big execution companies?
I think still it is better to look at suppliers, because execution is still not happening as we would want it to happen. But hopefully that will change. But as of now, we are more looking at suppliers.
And also, Mehrab, when you had this earlier infrastructure cycle of 2003 to 2005, where everything in infrastructure was doing well, you think that time the base itself was pretty weak and everything was infrastructure? So whether it's power, whether it's roads, whether it's defense, you think now that has shifted? So now it will be a more not such a recovery that everything in infrastructure will go up.
Yes, I think so. As I said, as you also said, I think currently at this point of time, roads is doing good, railways is doing good, defense is doing good within the segments. So everything is not doing good and everything may not do good. It may improve from this, what it is currently. But I think we have to be very selective within the segment also, and which stocks also we invest in within the infrastructure space.
Right. Just in terms of infrastructure, the point about credit growth that you were just talking about, you think right now there is excess capacity in the system? So only once that pick up, you will see that credit growth also going up?
Yes, I think there is excess capacity within a lot of the infrastructure space. Even if you see domestic cyclicals like cement and all, there is still excess capacity and they are not operating at full capacity value. So I think once the growth picks up, then only the capacity will be utilized. And then I think when they get confidence about investment and generating that kind of ROE, I think then only they will infrastructure again start borrowing in a big way from banks.
Right. And, so this would be the best time if you expect a pickup in any sector within infrastructure because they have idle capacity. They have already done the investment. So once the pickup happens, margins would grow multifold?
Yes, I think so. The delta is quite high and this would be one of the good times, next few months. I think if we can spot a few good companies within the infrastructure space, I think that would give better return than the markets over the next few years.
Right. Just a word on sectors probably which you would have not looked at for a long time. So it's telecom and real estate. Let's start with telecom first. Do you think that it's the fierce competition right now that you are witnessing, but it's the last leg of this fierce competition in the sector?
Yes, we are witnessing fierce competition, but whether it's the last leg or not, I am not sure about that. So telecom is a sector, which we are quite underweight. We have been underweight and we continue to be underweight, at least at this point of time.
Right, but with the merger of Idea and Vodafone or probably consolidation in the industry which is happening, do you think the sector has started to look, or you would want to look at that sector or just wait for the prices to stabilize?
Yes, certainly I would want to look at the sector, and but I would wait a little more to get more data, more confirmation before biting the bullet. But at least in the last one quarter, I have become slightly positive, at least slightly my mind is open towards the sector.
Right, and what will be your call as far as real estate is concerned?
Real estate, I think I would still avoid. They have been in a mess for a long time, and I think except certain pockets, certain companies which are doing good in certain markets, but overall the sector, I am still very, very apprehensive, and the growth is not happening, and I don't think that is going to happen for next few quarters also, except some pockets obviously. So as a sector as a whole, I would be quite underweight on real estate.
Right. We've been speaking to a lot of infrastructure, real estate companies, and they're saying in the affordable housing, there has been a big boost in terms of demand, in terms of the way people are, trying to come and, buy houses or inquire for houses. Say if you are not want to play it via the real estate companies, what are the other ways to play that story?
Other ways is obviously through the housing finance companies, which have done quite good over the last few quarters or years also. And the affordable housing story, I am also very positive. I think that story is there in India for next 3 to 5 years or even more. Only thing that the stock prices have gone up too much today, the valuations are quite high. So a lot of this affordable or the housing finance companies are trading at 5 times or more than that book values, 5 to 10 times book value. So which is quite costly. Then even, the best of the banks like HDFC and IndusInd Bank are trading at below 4 times book value. So when you are paying for such high prices at this point, so that I'm not sure, but otherwise the growth in the sector stays tremendous, and at every correction I would be very positive on the housing finance companies.
Right. Thank you so much, Mehrab, for taking out time for us. It's always a pleasure.
Thank you for calling me.